Well, hello everyone, and I hope you all are doing well. Today I'm gonna do the EURUSD chart analysis for today's trade. So let's get started. First of all, let's take a look at the news we are having, and we are having a medium impact news into the market at 10:31 p.m. So be cautious around 10:31 p.m. because it could be a high spread and high volatile timing. So now let's move to the charts. Now this is the monthly chart and we can see that the price has swept the highs of the previous candle's high. This is a sign that the price can be bearish into the smaller time frames. Other than that, in major structure, the monthly is in sideways, so we can't decide a particular bias according to the major structure. So this will be our sign for the smaller time frames. So now let's move to the weeklies. Now this is the weekly chart and we can see that even weekly is following the higher time frame. That is, it is also sweeping the highs of the previous highs. So currently what we are doing is the price has swept the highs and moved into the downward direction. And nothing is yet clear here. So let's move to the smaller time frame, that is daily, actually daily, and then decide our bias. So yeah, into the daily, we can clearly see that we were having these equal lows and we had anticipated into the previous video that the price can possibly react from this unmitigated wick, and this is what happened into the market. The price reacted from this unmitigated wick, that is the 50% of the unmitigated wick, and then moved into the upside direction. So those who have already watched the video might have capitulated on it. So like and subscribe this channel and this video if you are currently liking it so far. So let's move to the 4 hours now. Yeah, so into the 4 hours, what we can see is that the price had broken the high and now the price has swept the previous high, and if we are going to continue this pattern of sweeping the highs, most likely we are going to see a retracement into the downward direction, mitigate something over here, and then move into the upside direction. So the bias is still not clear, so let's move to the 1 hours. Now this is the 1 hour, and 1 hour is also respecting the 4 hours, and we are having this unmitigated FVG into the market. So most likely, if we are going to sweep the highs like this, into the London session, I'll be anticipating the same, that the London session is going to sweep the Asia high and then move into the downward direction and move towards this FVG. So according to the 1 hours, most likely we are going to move into the downward direction if we are going to sweep the Asia high. So let's move to the 30 minutes now. And the 30 minutes confirms the FVG and we are having a confluence with the 1 hour. So most likely we are going to sweep the Asia high and then move into the downward direction, at least towards these equal lows, because possibly it could be a reaction zone, but currently we are having this confluence zone, so the higher chances of reaction will be this area. So let's move to the 15 minutes for our trade plan for today. So even in 15 minutes, we can see that the candle's highs are being swept. So this will be a sign of a weak trend into the upside direction. So possibly I'll be expecting the price to react into the downward direction, mitigate something over here, and then move into the upside direction towards this high. And why this high? So the answer lies into the daily. We can see that we are having this FVG into the daily structure. So I'm anticipating the price to at least mitigate this FVG and then move into the either side. So this is pretty much it. Do consider liking and subscribing this channel. Let's move to the next round now. The last round is, which candlestick pattern suggests a potential bullish reversal in the technical analysis? The first option is Hanging Man, the second option is Doji, and the third option is piercing line. So write your answer and try to be as much detailed as you can so that other people can also be benefited of it. So this is pretty much it. Thank you for watching.